phase two is what we call the frenzy phase. And this is where we're at today, all right? This is going to be unlike anything we've ever seen, and no matter how bullish you are, you're not bullish enough. The size of this move we're going into now is much larger. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it.
Bitcoin's frenzy phase is here, and the tsunami of institutional money is just getting started. That's the latest word from seasoned market analyst, investor, and entrepreneur Mark Moss. Bitcoin is entering its next big phase, known as the frenzy phase, and what's coming is bigger than ever. Moss explains that even though Bitcoin has already hit a $2 trillion market cap, this phase will bring in trillions more, driven by growing institutional adoption. The pace is picking up fast, with massive amounts of money flowing into the market like never before. Make sure to stick around until the end of the video, as Mark Moss reveals mind-blowing outlooks about his prediction. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Mark Moss on Bitcoin's unstoppable rise.
In this first phase, 2010 to 2020, Bitcoin is in this collectible phase. Now we can see some illustrations of this. We had the famous Laszlo spending 10,000 Bitcoin on a pizza back in 2010. So this Bitcoin, this collectible, what is it? Let's see what we can do with it. Would anybody trade me one collectible for another? How about some pizzas? It was a groundbreaking experiment. Of course, it was a very expensive pizza looking back in it. But remember, each one of these cycles is held back by scaling. And so in this scaling, then we had this experimentation into this altcoin boom. Well, let's make ones that are faster and cheaper and more private. And now this really culminated into 2017 with the block size wars. There's a book broken down on this, but this is one piece that's always there present. It was a necessary step. Now, I believe that this collectible phase really headed up in 2020, and we can see where this really took a blow off top with NFTs, the ultimate collectible. The NFT market exploded in 2020, growing 300%, over $250 million in transactions. 97% of wallets were using them, but by 2021, it got to 41 billion. As you can see, by 2022, it completely fell off a cliff. Trading volume dropped 97%, and today, reports are that 99% of NFT projects are dead. So the collectible phase was a necessary step, but it's not the future. Now we can see that going into phase two, which is then the store of value phase, the seeds were already planted early on. We saw early back in 2013, venture capital fund Andreessen Horowitz already started to invest into Bitcoin startups, trying to help build that next stage. We saw 2017, CBOE and CME started doing futures. That was really the first time we started seeing institutional adoption coming in for the store value. 2018, Fidelity started planting the seeds to get other institutions in as well. And so that's where it phased. Now, looking at some of the prices, we can see in 2010, these on the left are store of value assets. Jeff Booth was up here earlier showing store of value assets. So these are assets that we store our wealth in, obviously. Real estate, gold, collectibles, equities, real estate. Now, if we go back, gold was only a $5 trillion asset in 2010. By 2020, it was $11.5 trillion. Real estate was about $180 trillion. By 2020, it was $326 trillion, growing at a 6% ARR. Now, during this time, all store of value assets went up by about 8% ARR. Bitcoin went up 4,426%. It was an amazing time to be in Bitcoin. During that time, we can see that Bitcoin went from about 30 cents for a Bitcoin to $28,000. Again, an ARR of 4,426%. Now, during this time, Bitcoin, by 2020, took about 0% of store of value assets. Not even a blip, not even a drop in the bucket. Okay, now let's get into some of this future, okay? Now, phase two is what we call the frenzy phase, and this is where we're at today, all right? This is gonna be unlike anything we've ever seen, and no matter how bullish you are, you're not bullish enough. Now, this is where Bitcoin evolves from the collectible phase and cements itself as the premier store of value. All right, So what we can see is we're in this institutional frenzy phase, and we're starting to see institutional adoption come in. And now, of course, here we are talking about sovereign adoption that both happen in this phase. Now, this maps, again, in the evolution of money, and will complete the store value phase. We'll get to the medium exchange phase next. But this is where we're at today. Now, again, not all collectibles make it to this next level, but Bitcoin will. Now, I do want to point out real quick, for everybody who thinks that they're too late, that maybe they missed it, using an S-curve dynamic is how we'll look at technology adoption. Now, one way we can look at this S-curve is that the time it takes to go from 0 to 10% is the time it takes to go from 10 to 90%. And the reason why I want to show you this is because it illustrates that the size of this move we're going into now is much larger. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. The size and speed of the move is much bigger, so you haven't missed anything. It's just getting started. Now, at this point, we can see this total store value assets. You can see Bitcoin down here on the bottom right, sitting today at about 2 trillion, and it's still just a little blip on the road right here, a drop in the bucket. Now, how much bigger is it going to get? Well, I got a bunch more charts to show you, so don't worry. But really, right now, this is the frenzy. This is the institutional phase. We can see that right now today, about 60 companies have already started adopting Bitcoin on their balance sheet, and this is happening every day. We see new announcements of this happening. This chart, the big chart here, shows the real institutional adoption. We have MicroStrategy adding about $1 billion a week. I just saw before I went on stage, Riot just added about $500 million of debt to buy Bitcoin. We have Marathon doing $1 billion. And right now, this is showing us that about 13.5% of all Bitcoin is now being held by institutions. Of course it is. Bitcoin was always coming for everybody.
Meanwhile, the International Monetary Fund has agreed to provide El Salvador with $1.4 billion, the first installment of a $3.5 billion package aimed at supporting the country's economy. This deal includes adjustments to Bitcoin policies, such as making Bitcoin optional for the private sector and reducing the public sector's involvement. However, the government remains steadfast in its commitment to Bitcoin as legal tender. Additionally, the director of El Salvador's National Bitcoin Office, Stacey Herbert, reaffirmed the country's dedication by announcing plans to increase its strategic Bitcoin reserve. The government has recently acquired another Bitcoin, bringing its total to 5,968 coins. What do you think of this development? Share your thoughts in the comments. Now let's go back to Mark Moss as he gives more mind-blowing outlooks.
Now we're getting into what's called the deployment phase. This is 2030 to 2040. Now this is where things start getting really exciting, but warning, I have to leave some historical numbers behind, and I got to start using my crystal ball. My crystal ball is a little fuzzy, so forgive me. We may have to kind of fudge through this a little bit. All right, this is the adoption and the synergy phase. Now, this is where things start getting really exciting. We start to see adoption. Now, some interesting things about adoption is a lot of Bitcoin critics want to tell you that Bitcoin's already failed. It hasn't achieved any adoption. Why isn't it a medium of exchange, they tell you? Why can't I just go to the store anywhere and spend my Bitcoin, they ask? Well, I'll tell you why. Because history gives us a framework and tells us that it doesn't come until the next phase. And anyone who's expecting that right now doesn't understand technological revolutions. They don't understand monetary history. They don't understand that there's this evolutionary and emergent process that we have to go through. And what they also fail to understand is that even though Satoshi called it an electronic cash system, they say it's failed because it's only a store of value, they failed to understand monetary history and something specifically called Gresham's Law. Anybody ever heard of Gresham's Law? If you read Bitcoin Standard, you probably do. Gresham's Law says that bad money drives out good. Bad money drives out good. So what that means is we're always going to want to use the bad money, not the good money. As long as I can use fiat currency to buy my lunch, or buy my drink at the bar, I'm going to use the fiat currency and I'm going to save the good money, which is the Bitcoin. Why would I spend the good money? Now, we have a perfect way to understand this. In the United States, of course, we have coins and we have quarters and dimes. A quarter's a quarter of a dollar. Now, up till 1965, these were made out of pure silver. Starting in 1965, they made them with junk metal, That's nickel and copper. You cannot find in America a pre-65 quarter or dime in circulation. They're all gone. They were driven out. If you just so happened to get some change and you found a pre-65 quarter and dime, you would not spend it. Why? Because a quarter now is worth $4, but you'd only get 25 cents for it. The bad money, the worthless quarters and dimes, have driven out the good ones. You wouldn't spend those. And so it's a perfect illustration. Now, why would we then use Bitcoin as a medium of exchange? Well, we would only use Bitcoin as a medium of exchange if it could do something that the existing money, the fiat system, could not be used for. Now, we can use this as another example. Gold collectors buy bags of what's called junk silver. They buy bags of these pre-65 quarters and dimes. Why do they buy them instead of bars? Because they believe that at some point the fiat system crashes and they're going to need the quarters and dimes in small denominations to barter with. They believe in a world where the other money, the fiat money, no longer works, and they would need that money, which illustrates the point. So then we ask ourselves, well, what would we need Bitcoin for that fiat would be no good for? Certainly not to buy the drink at the bar. Works fine for that. My plane ticket, make my house payment. So what kinds of things? Well, we look at the unique utility abilities of what Bitcoin can do. It's fast and cheap, it's borderless, it's permissionless, it's censorship resistant, it's immutable. So if we need to do those types of things, then we might want to use Bitcoin. Bitcoin is now the second largest asset in the world, behind real estate. And yes, it's pulled a lot of value from real estate, but we still, turns out, need places to live, still need warehouses for our stuff, buildings to meet in. Turns out we still need real estate, but it has pulled value from real estate as well as every other asset that's out there. It's become the denominator. And at this point, the world has decided that we should no longer use the denominator of fiat currency. And at this point, Bitcoin has reached its full and final stage, which is stage 5, and has become the global unit of account. At this point, you no longer measure your wealth in fiat, you measure your wealth in Bitcoin. And at this point, 1 Bitcoin equals 1 Bitcoin. Now, at that point, this is going to sound crazy, but hopefully I've built this foundation for you. At that point, we're talking $8.5 trillion of global store of value assets. Just using the Fed's CBO or the CBO's projections of money printing and a basic historical growth rate, $8.5 quadrillion. If any of you are good at math, divide that by 21 million, and that puts Bitcoin to about $400 million per Bitcoin. And again, this is not speculation. This isn't a dream. This is the 6th time we've seen this exact pattern play out over the last 300 years in an exact repeating process. Over the 50 years, just like the Industrial Revolution, steam engines, rail, still electricity, automobile, oil, telecom, and now the decentralized revolution. We see it repeating the same time. I'll put the slides up here. They're open source. You can download them. But I want to just leave you with one thing. This is not just a new technology. This is a revolution. And you know that because you're here. So the question becomes simple. Are you going to take advantage and help lead this revolution, or are you just going to watch it pass by? The choice is yours.
Bitcoin has emerged as the second largest asset in the world, trailing only real estate, and is on a clear trajectory to redefine global finance. It has drawn value not only from real estate, but from every major asset class, strengthening its role as the ultimate store of value. Mark Moss stressed that the world is moving away from fiat currency as the denominator of wealth, with Bitcoin taking its place as the global unit of account. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.